let's hop across to Siddhartha Khemka, Head of Research Wealth Management at Motilal Oswal Financial Services, who joins in. Sid, morning, Friday morning. First comment on these textile makers. You know, Gokuldas is down more than 20% in a month. What's your view on it? You know, these are good companies, and this too shall pass. But what would you recommend at current levels?
Good morning, Nigel. Yes, happy Friday. I think the uncertainty, especially for these exporters, that continues. We saw a sharp rally when initially Trump announced a lower tariff for India compared to some of our neighboring and competing countries, the likes of Bangladesh, Vietnam, Indonesia. But so that was a big positive for some of these companies. But now with the additional tariff, as we just heard the management, 20% tariff was something that they could live with. But at 50%, it becomes really non-competitive for them. So I think market would react to these news developments, but we are overall hopeful of some resolution coming out over the next few days. We have seen that the President Donald Trump using these as a hard negotiating tactics for some of the other countries. Otherwise, the other option for India is to look for other trading partners in other regions like the EU, some of the other regions where they can build the business from a long-term sustainable basis.
Okay. Siddharth, hi. AU Small Finance Bank, that will be the stock in focus, universal banking license. Buy the stock today?
Yeah, Riba, hi. So first of all, AU Small Finance Bank, no longer a small finance bank, will be converted to a universal bank. But yes, a big approval for them. I think it is the first small finance bank to get a universal license under the voluntary framework. This is a major milestone, not only for AU, but for the entire banking industry in India. What we believe is that this is expected to not only enhance the brand positioning, it will improve a lot of business parameters, be it CASA ratio, the cost of funds can come down, it will increase access to urban affluent customers. The loan size restrictions will go away, and hence they can scale up to larger ticket secured retail, SME, mid-corporate lending. What it also will do is the PSL mandate will come down from currently 60% to 40%, and hence looking at a better yield on their overall funds. So near-term positives, what we see, credit costs could come down, strong loan book growth, potential to raise capital, and more importantly, a stamp of approval from RBI on the current management. So overall, very positive. We believe AU is well placed to capitalize on this transition, and near-term earnings recovery, potential capital raise, and continuity of leadership would reinforce this positive outlook. So we maintain a positive view on AU. We have a buy rating with a target price of 875.
Okay. All right. Positive view on AU. Got that, Siddharth. We'll
go. Sid, from the jewelry companies, what do you like?
Yeah, I think we had the numbers from Titan. The blue chip continues to shine. Very strong start to FY26. Consolidated revenue grew 25%. The standalone jewelry business saw a growth of 17%. We also saw strong contribution from other segments. The eyewear segment posted 24%. The eyewear segment posted 13%. Watch segment saw strong growth of 24%. Margins were higher, and I think across segments, overall EBITDA margins expanded 170 basis points due to better mix and also some of the gains. So I think Titan is well positioned to sustain its strong growth, supported by the robust brand equity that it has, continues to do the store expansion, as well as the formalization of the jewelry industry. There has been some hiccups and there is some concerns with regards to the rising gold prices, but I think jewelry in India that continues to shine, and with a strong brand like Titan and a consistent growth that they are able to deliver, we continue to like Titan from a long-term perspective. We have a buy rating with a target price of 4,150, giving more than 20% upside from a one-year perspective.
Siddharth, thank you very much for joining in.